Awesome, great. Good to see everybody here. Happy Memorial Day weekend. It is Saturday, May 25th, 2019. And today's webinar is going to be related to stock correlation. What it is, what's correlation, alpha, beta, what you can do in EdgeRater to find stocks that are correlated. And so, go ahead and get started. There's obviously the regular disclaimer. So what we'll cover, we'll take a quick look at last week's good, bad, and ugly stocks. And then we'll get into the correlation alpha beta template. We'll take a look at the correlation matrix template, and then I'll throw in another template, which is the doppelganger stocks. And the reason I would throw that in is that it is a template which uses correlation to find stocks that are trading in a similar pattern to any pattern that you choose from any other stock. So it's kind of an application of correlation. So we'll take a look at that one too. So let's jump right into a few definitions if you're not familiar with correlation, etc. Correlation is a measure of how one security moves directionally in relation to another. The value of correlation ranges between -1 and +1. A correlation of 1 means that if you have two stocks, stock A and stock B, it means that they both move in exactly the same way. So on one day when the stock is moving up, the other one moves up. On another day when it moves down, the other one moves down, exactly correlated to each other. Correlation of 0 means that they're entirely unrelated. And a correlation of -1 means that they are moving in exactly opposite directions. Here's an example. Amazon and Facebook over this time period. This was September 28th, so not current chart. So don't think this is current. But they had over the last 10 bars of data, they had a correlation of 0.97. It was very close to 1. So meaning that they both move up and down in exactly the same way. And you can see, if you look at the last 10 bars, you'll see that that seems to be true. They seem almost, if you weren't looking at the name of the stock here and you just looked at the last 10 bars, you might think that actually you're looking at the same stock. Beta is a measure of the sensitivity of movement or volatility of one stock to another. So a beta value of 1 means they have exactly the same magnitude of move. 2 would be twice the magnitude, so higher volatility. And -2 would be twice the magnitude in the opposite direction. And examples of things that would have a beta value of 1 would be if you're relating, say, SPY, would be if you are taking SPY, SPY, the ETF, and you compared it to, say, well, if you compared it to itself, SPY to SPY, have exactly the same magnitude, beta of 1. If you compared it to one of the 2x ETFs of SPY, it would have a beta of 2. And if you were looking at an inverse SPY ETF, it would have a -1. And a 2x inverse ETF would have a -2. And then alpha is a measure of the difference between the returns of one stock versus the expected returns based on its beta. An alpha of 0 is returning as expected based on beta. Negative alpha, it's underperforming for its risk level. And positive alpha is it's outperforming for its risk level. Hence the name of the site, Seeking Alpha, is all about what investors and traders are looking for, alpha. So in summary, correlation, alpha and beta are values that give a statistical measure of how one stock is related to another. Highly correlated stocks move together. Higher beta stocks move with greater magnitude, and higher alpha stocks have higher excess returns than their beta value would suggest. You can find a summary of this and some examples on my blog site, edgerater.com/blog. If you just go to /blog, you'll be able to find that post by searching. But if you actually type in this, how to find correlated stocks and alpha beta values, you'll go directly there. Another quick way to get there is if you're in any of the templates, we'll show you in a second. You can just click on the template info, opens up a browser and takes you there. You can click on the more info over here, and that will take you directly to that blog post too. So before we get into this, just put that aside for a second. Let's just go back over the week and take a look at the week in the good, bad, ugly report. And this will actually help us with looking at some of the correlation too. So as pretty much always, I'm going to use my CBOE weeklies list, which I have updated to 5/24/2019. And I'm just going to run good, bad, ugly, see, and just take a quick look at what has happened last week. And then that will obviously bring us up the report. And if I take a look at, I'll sort by week to date, and we'll see the performance for the week. Highest performing stock is EMES. Let's take a look at the chart over here. Okay, it's a very low price stock. Doesn't take much for it to move 70%. And then we go down the list, we'll find, we have a 19% Avon products. And let's actually just put this on one side over here. And we'll just quickly come down through this list and get a feel for what has happened. So is the Brazil 3X Bull shares had a great week, but obviously that's coming off the back of a pretty bad set of weeks. I'm looking at a weekly chart over here. Sprint had a pretty good week. Roku down here. Target. Target. Roku. Pro shares ultra short crude oil. And this was one of the big stories of the week, is oil moving lower. So obviously the ultra short is going to be moving higher, but that was oil. If anybody noticed, I don't know if anybody was paying attention to oil during the week, but it had one day when it was down, I'm going to say close to 5%. So quite a big move. And that's one of the themes that I want to kind of stick with during this presentation. So I haven't added, it's already in here in my list of the CBOE weeklies. The ETF for oil is USO. So let's sort by symbol, and I'll just go and scroll down to find USO. I could do that, or I could do the Control F to find USO. Okay, here it is. USO. So this is the weekly move in USO. So for the week, it's down 6%. Let's take it to a daily chart over here. And we'll see we had a big drop on, that would have been starting Wednesday, and then the gap down into Thursday, and then Friday. A fairly decent range compared to its normal range, but compared to recent days, not that big a range. So this is a little bit of I think an interesting point in the market. The story behind oil moving, I don't know if anybody has been paying attention to this, but global slowdown is one of the big reasons. Inventory is rising is another reason. So these are the, let's say, potential reasons, excuses that have been given for this move down. Now, oil is a big part of the economy, and so I think it's always good to kind of pay attention to what oil is doing to, in conjunction, in correlation with the overall oil market. Okay, so it gives us a little bit of context here. And just for interest, let's take a look at the worst performing stocks of the week from my list here. So I'm going to do a reverse sort. And we have this company here, which I'm not going to try and pronounce their name. There's NBR, Kohl's, Rite Aid, Qualcomm, JCPenney, Whiting Petroleum. Okay, so we're getting into some of the oil-related stocks here. Energy stocks down, a little bit of a theme going on here. And then we get to UCO, which is the Bloomberg Crude Oil ETF, which actually for the week is down 13%. Reason being, if you can think back to what I was saying before, this would have a correlation of, or a beta of -2. It's a 2x, ultra 2x ETF. Okay, let's take that away. We've got a little bit of context for what we're going to talk about. And so the next thing is the templates in EdgeRater that help to look at correlation. And there is the correlation alpha beta and correlation matrix. These are the two main templates, and you will find them under Pro Tools. So come down to your Pro Tools category, and you'll find them somewhere in this list. Your list will not be in exactly the same order as my list, because I tend to reorganize my list by dragging and dropping. I can just drag and drop them in different locations. So I've done this over time. So the default sorting order has changed from what you probably have. But they'll be somewhere in here. You'll find correlation matrix and correlation alpha beta. And if you look at these regularly, put a little star by it. If you highlight the star next to it, then it's going to appear in your favorites category. And just for this webinar, I've just got these set in my favorites category, so we know what we're going to look at today. All right, so correlation alpha beta, I'm just going to go ahead and use the default settings for this template. You can see the default settings are that it's going to correlate everything to SPY. In fact, I will change this. The correlation periods, there are 5 periods that it uses by default in here, ranging from 10 bars, obviously 2 weeks, up to 50 bars, which would be 10 weeks. And SPY, I think I'm going to change that to USO, because we have found that oil has made a significant move this week. So I'd be interested to see what is correlated with oil. Okay, so I'm now going to run this this template. It will take a little while. It's going through quite a lot of data. This does not take as long, by the way, as the next template, which I have pre-run, because the correlation matrix does a lot of calculations, because it's doing a many-to-many combination of all your stocks against all your other stocks. You can actually end up with millions and millions of calculations for that one. This one runs quite a bit faster. So correlation to USO over multiple periods. And it's split into the different periods here. So you've got your 10-bar periods, 20, 30, 40, 50, etc. So if we want to find out what is mostly correlated with oil. Oh, and the symbols, by the way, are your Greek symbols for correlation beta and alpha. So this symbol here looks like a P, but it's actually the Greek symbol. It's a Greek symbol, and it's used to denote correlation. This is the Greek symbol used for beta, and this is the Greek symbol for alpha. So what I'll do is I'll sort by correlation, And if you remember from the top of the webinar, the correlation value of 1 is indicating that a very high correlation moving in exactly the same way as the stock that you're comparing to. So at the very top of the list, no surprise, this should always be the case, is the exact stock that you're comparing to. So you're comparing ESO to USO, it's a correlation of 1. But what also has a correlation of 1 here, UCO. And this is the ultra. It's the ultra, as I pointed out when we looked at the good, bad, ugly report, the ultra ETF. So it's a 2x ETF. So how can we tell, is there anything in the correlation alpha beta that gives us a clue as to the fact that it's a 2x ETF? And it is right here under beta. It has a 2 beta, or roughly 2, not necessarily exactly, but roughly 2. And the alpha value the excess returns for the volatility are 0. That should be expected because it's essentially the same underlying components are used to create this ETF. It's the same underlying conditions. So it should have an alpha of 1. So this is an example of an ETF which is performing as expected. It's a 2x ETF, and it's not giving you any excess returns over USO. But it's twice the volatility. But then it's interesting to just take a quick peek down through this list and what is related to oil over the last 10 bars. We've got things that you might expect, such as various oil stocks, Marathon Oil, Exxon, the XOP, which is the S&P Oil and Gas, RIG, obviously related to oil, Chevron, Valero, all of these things related to oil. But there are some things in here that you might not expect, such as Rite Aid, Chipotle. And most of these you might expect. Lowe's, obviously, Sirius, and that's probably something that would be hard to explain why that would be related to oil. And that's another thing about correlation, is that sometimes things can be correlated, but for no good reason necessarily. They just happen to be in correlation over the last, in this case, 10 bars. Now, if you look across the row here, you'll see 10 bars, 20 bars, and so on. The correlation for Sirius starts to get less the further out you go. Okay, so when you get to a 10-week period, your correlation has gone down to a 0.34, meaning it's not really correlated. But over 40-bar period, 30, 20, and 10, it's actually highly correlated. This template has chart layout, a special chart layout associated with it. So I'm just going to show you what that is. If we, what I'll do is I'll double click on the first one, USO, and I'm just going to split my screen so that we can have both side by side. When I'm working at home, I have multiple monitors, and I normally have the report on one monitor, and I'll have a chart on the other monitor. But on a one-screen situation, you can set it up like this. Works pretty well. And the chart layout. So if you remember from the Getting Started webinar, when we talked about how reports are related to the layouts, if you want to link them together, there's a little button here. If you hover over that button, it will tell you that it is linked to template layout. So this template has this special layout associated with it. And I'll explain what it's showing here. So the first thing it's showing is the chart of the whatever you click on in the row. So if I click on UCO, it's going to show me UCO up here. If I click on USO, it's going to show me USO. There is, you can't see it very well here, but because these things are highly correlated, so they superimpose over each other almost exactly, there is a gray line. The gray line is the base stock or ETF or symbol that you're running a correlation for. Okay, so if I zoom in, you might be able to see it a little clearer, more clearly. You can see that it's here. This would exactly match the close price of USO here, because it is actually USO. The only thing to bear in mind is it might not exactly match the further you go back, because it is scaled on the left axis. So sometimes those scalings can be slightly off, and so you might find that it doesn't exactly match up. To find out how it's scaled, you can always click on your Formula Parameters tab, and you can see that this is an indicator called Compare, and it's scaling on the left axis. So that's how you find out the scaling. Now underneath, there's the correlation, 10-bar correlation, because I clicked over here in the 10-bar correlation column, so it's showing me a 10-bar correlation. That's 1, and it's always been 1 because we're comparing USO versus USO in this chart. If I click on, let's choose a different one. We'll click on, say, Marathon Oil. And still looking at the 10-bar window, we see the correlation is pretty high today. It's around 9.95. Now, the correlation indicator area below the chart will actually then show you the 10-bar correlation going back through history. So it's always been fairly highly correlated with oil. It did drop down to being uncorrelated, because you can see it went down to 0, and a 0 correlation is not correlated at all. So at this point in time, from this bar and the last 10 bars, there was no correlation with oil. You can see oil in the upper gray area, and you can see marathon oil here. So during this 10-bar period, it wasn't correlated, but now it's jumped back to a correlation of 1. Market selling off, the energy market, the oil market selling off, and this is really just following that that sell-off too. Now below there, you've got the alpha value, and then below that you have beta. So this layout will show you all of the correlation alpha beta all in one chart, and all the history of that too. If you click in your report over to the 20 period correlation column, now the correlation bars underneath and the alpha and the beta are actually going to change to be a 20 bar instead. And if I click over to 30, they're going to be a 30. You're going to see 30 bar correlations, alphas and betas, and so on. And so I can go through like that. So that's one of the neat things about these reports, is that the templates and the reports are linked in very special ways to the chart layouts. Okay, first of all, before I move on, I want to show the correlation matrix. And before I do that, are there any questions on anything that I've shown so far? Let's have a question over here. Okay, Ross, I can see your question. But you're talking about the matrix, and we haven't got into the matrix yet, so I'll save that. Maybe I'll answer the question when I look at the matrix. Let me see if I have any other Q&A. Here we go. Good, good, good. Oh, you're not talking about the matrix, you're talking about the data in the scan. And so you said you ran the scan, but there's no data in the report. Symbols are showing, but no data. Okay. I would say just go back and make sure the very first thing you do with any, before you run any template, is just ensure that your list over on the left-hand side has up-to-date data. And another thing that can catch you sometimes is this: in the run template area, it's possible that you've set a prior date up here. So you could go and clear that, because you can run any of these reports for any historical date. So that's one thing that may have happened. And the other thing that could happen is in your list of data, I should point this out too, just make sure in your data update options that you have got associated with the symbol list enough data for it to process. And so I normally set mine to always have 10 years of data. So just make sure you have 10 years of data, and you should find that works okay. So if that helped answer that question, that would be, that's good. And yeah, so let me know if that helped. That would be great. All right. Let's go over to correlation matrix. The matrix. The matrix is a really extensive processing template. And what I mean by that is, take a look at the matrix. If you look at the description of correlation matrix, it will actually tell you under important, this template generates a true many-to-many matrix, meaning all of the calculations, the resulting number of calculations can be very large. because what it's going to do, it's going to take every symbol from your list and then run a correlation calculation against every other symbol. If you have a list of 1,000 symbols, then you're going to have 1 million different calculations. Okay, that's not too bad. We're talking about PCs. They work fairly quickly. That's not too bad. Imagine, though, that you have now a list of 8,000 stocks, which is your entire database of stocks. You now have 64 million calculations, and that can take a little while to run, but it's okay. You can run it and go and get a cup of tea, come back, and the report will be there, and also it'll be saved on the hard drive, so you can actually just load it back in using the open report button over here to load in a previously generated correlation. So having said that, I'm not going to run this template. I have pre-run it, and I'm just going to open it up and bring it over to the screen over here. And this is the matrix. Now, when you first run, let me just make sure that this appears as it would when you first run it. So I'm going to look at under reports and open up the matrix that's been generated. Right. So this is the way, I'll close this one down. This is the way that it will appear when you first run it. And you should see a green highlight area going from the top left to the lower right, because the default way that this matrix is sorted is by stocks coming down in the rows from 7 all the way down through to 500 and however many there are in the CBOE weeklies list. But also those same stocks are then put into the columns going over to the right. And so where the green occurs, you are actually matching up a stock with itself. So that should always have a value of 1, and that will always have a green highlight. This report, one second. This report has some special sorting associated with it. The first thing that you'll notice that it has standard sorting, which is clicking on any of the headers, it will sort by the header. So clicking the second time will reverse sort. But it also has a sort left to right. So if I click over here, I'm now sorting by left to right. So if you look at the columns over here, we've now sorted alphabetically the list of symbols that are in the columns. And what that will do then is, if you find something, and let's go and find our favorite symbol for the week, USO. Okay, USO is over here. If I click on USO, I'm now sorting. Oh, I didn't mean to say left to right sorting alphabetically. I meant left to right sorting in terms of correlation, of course. Okay, so I'm clicking on USO over here, and now the matrix has been sorted to show me all of the stocks in descending correlation order. So I can see them up the top here, USO as a 1, obviously, UCO, HES, NTAP, XLE, and so on, CMG. These are the things we already found in the correlation alpha beta template. If you remember, I'll bring that back in quickly. USO, UCO, HES, NTAP, XLE, ERX. They are now over here in this list. But what I also find a good way to sort this is I've already done that sort, and now I'm going to click on USO up here twice. And so now I've brought everything to the top left quadrant of this matrix that is related in any way to the moves in oil. And if I zoom out of this, and I'm just using my mouse, so I'm using the control key and using the wheel on the mouse to zoom out, you'll get a nice sort of highlighting of the matrix. Obviously, you can't see the symbols here, but you can see the colors. The things that are inversely correlated are down over here and over in this area, and the things that are quite correlated to oil are up in the top left quadrant. So let's zoom in again on that. And so this is a nice way of finding and sorting the correlations. And now when you look at a chart, as I said previously, that charts have a special linking to reports. So if I bring up this chart over here, and let me just pop this over on the left. As I scroll through here, or just come down in through the matrix, we're going to find that the symbol that's displayed is going to be the symbol for the row, in this case XLE. The bar underneath, the line, the gray line underneath, is actually going to be the stock that we're running the correlation against. And then we have the same correlation alpha and beta below. Now, you can see that the difference between running a correlation to one symbol is that if we're running against one symbol, our gray line is always going to be that symbol. But with the matrix, we've run against every other symbol. And so we're now able to just do a quick scan to look at both the stock that we're correlating against, the two stocks essentially that we're correlating with each other or finding correlations for. And you'll see one of them as the gray line and one of them as your candle bars. And correlations can be useful for if you have a portfolio of stocks and you are trying to remove risks associated with having too many stocks that are correlated. For instance, you don't want to have, you might want to have, but if you had USO and UCO and HES and NTAP in your same portfolio, your risk is now very heavily weighted in moves in oil. Bear in mind, this is still a 10-bar correlation, and things can come in and out of correlation. So it doesn't mean that they're always correlated. But you can see if they're always correlated by just taking a look at the correlation price over here. So for instance, Goldman Sachs correlated to HES, which is Hess Corporation. Right now has a correlation of 0.97, which is pretty high. Okay, over the last 10 bars, and you can see the gray line underneath, and you can see Goldman Sachs over here. So over the last 10 bars, they've been moving pretty much in sync, following the same up and down moves each day as each other. But if you go back through time, you can see that that correlation isn't something that's been consistently true. Back over here, when the market was selling off into over the Christmas period, pretty high correlation. And this is kind of an indication, I think, that when markets are selling off, it's hard to find a good place to take cover and find positive stocks. Everything, when the market is crashing, essentially everything is crashing at the same time, and so that's hard to find a safe haven there. And so when things all become very correlated, that could be a good warning sign for the market. But then when things start to take off again, obviously not everything is moving in the same way as they were when they were falling. So I think when the market is in crash mode, correlations start to come in line, and when the market is recovering, the correlations will then become less. Lower numbers. Okay, another question. How did you get the chart to come up with the alpha beta setup off of the matrix scan? Well, this is all to do with the linking to template layout button in the chart. You see this button? It's not a one-time you press it and it does something. If I press it, it will stay highlighted orange. meaning that it's on and it's always linked to the report layout. But if I don't have it linked to the report layout, now as I scroll through my list, you can see the gray bar is not changing because I've fixed now this this layout to be whatever it was when I clicked on or clicked off of that button. So I want to make sure I have that highlighted and I have my template linked. And then you'll find that they all change in sync. Okay, so that is that is the correlation matrix. It's very powerful. I would recommend running it on all 8,000 securities. It's very interesting, but it might take actually a couple of hours to complete. But that's okay. It will be saved on the hard drive, and then you can just load it up and see the correlations. But generally, for running most reports, I like to use the CBOE weeklies list because it represents a list of stocks and ETFs that have enough interest in them that they have introduced weekly options. So the volume is normally pretty good. Not all the time the spreads, the bid-ask spreads are great, but it's a start, and I think that's where your big names are going to be in that list. So I like to use that pretty much as a default for running most things. Okay, so then the other thing I want to take a look at is the doppelganger, and I don't think I ever mentioned the doppelganger stocks template to anybody. This was something that I did introduce after working on the correlations. Doppelganger stocks, as it says over here, locate stocks that have similar price pattern to a stock and time period of your choice. When you run the template, the correlations to your stock and time period are calculated for every stock in your list. It's done for high, low, close, open, and volume. High correlation values indicate similar patterns. So, and I haven't gone through and found something that would be interesting to see. I just wanted to show how you might use this this template. So we'll take an example, and let's open up a chart of, let's see. Let's find the pattern in this chart. We're looking at XLE here. So let's find a pattern in here that is somewhat interesting. So this pattern here, and let's say a 10-bar pattern right here. So on 2019, February 14th, Valentine's Day, we'll count 10 bars. 1, 2, 3, 4, 5, 6, 7, 8. We'll count 8 bars. These 8 bars, let's say, are very interesting. This pattern here of a dip and then a recovery to the same level. Maybe that's something we want to look for in our entire symbol list over all the time periods that we have, over all the history. So let's take the dates. That would be February the 5th to February the 14th, 2019. So let's come over here and let's say it was XLE. It was 2019, February the 5th to 2019. I did say February, that would be a 2. February the 14th. And I'm going to run this now against my entire list and my entire history. I have 10 years of history in this list. The more history you have in your list, the longer this template will take to run. And so you can see it's just finishing run here. And so what this has come up with now is the match to XLE from 2.5 to 2.14. These are the correlations. So the correlations are split now in terms of your close. If you're only interested in how price moved from close to close, you could just use the close column. If you're only interested in the open, the high or the low, you can use those. If you're only interested in how volume changed over that period, you could just look at correlations of volume. But then the average correlation is an average of well, you can see that the formula here is the average of G7 to J7. So it's not including the volume. It's the average of open, high, low, and close. Now that, if you get a high correlation in terms of your average, it means not only did the close price move from day to day in the same way as our chosen time period, but the open, the high, and the low moved in the same way. So that would be a very unique and unusual occurrence. So it's hard to find correlations of exactly one there. But if you look at the close price, again, not that easy to find correlations of exactly one, but we're getting close here. Let's double click on one of these and we'll bring up our chart over here. And let's put this on one side, put this on the other side. Okay. Now, let's scroll back over to here. Okay, so what it's showing is remember, we were looking for the dip and recovery to current status, and we're looking for it current status, current level, and we're looking for it at the right edge of each one of these charts. So here is something that the calculations think is similar. And if we count back the 8 bars that we had or so, 1, 2, 3, 4, 5, 6, 7, 8, as far as the calculations are concerned, this was a dip and a recovery to a level. So there's only a correlation of 0.85. It's not exactly, but it's the closest we have for that pattern that we were looking at. And as I go through each of these, we're getting less and less correlation. And you can see that there is that pattern exists on the right-hand side of the chart. But it doesn't necessarily always look exactly the same, but it is somewhat similar as far as the calculations go. Now, as we get down to correlations of 0.5, that's really, you're not really correlated very much there. And if you get down to correlations of 0, you're not correlated at all. But this report is showing you every stock in your list and how it currently is correlated to that period that we looked at. So it's an interesting template to look at. So there we have it. There's 3 templates in EdgeRater that deal with and look at correlations. We have correlation alpha beta, correlation matrix, and the doppelganger stocks, where you're trying to find patterns from any historical period and relate them to how things are occurring today in your symbol list. Now, are there any questions here? If not, we'll wrap up early. And I do want to mention one thing. I'm just looking through right now. So no questions. Okay, it's quite straightforward. I would encourage you to take a look at it on your system. Okay. Yeah, have a look at it on your own system. See if you can produce the charts. Okay. David, have I tried to test persistence with alpha? Not really sure what you mean, but I can say that I haven't really done any testing with correlation. The templates are there for people to use, but personally, I haven't done any testing on correlation persistence. I'm not really sure what you mean by that, but I guess the answer to that question is no, I haven't. Does high alpha tend to continue? Well, I mean, as I said, I haven't done any testing on that idea. But for instance, if you found something, if you wanted to do your own rough testing. I'm not saying this is numerically valid testing, but if you wanted to get an idea, what you could do is bring up your correlation alpha beta, take a look at highly correlated stocks, take a look at high alpha. So you could say I'm going to filter my correlations down to, let's say, a number of filters. I want correlations that are greater than, say, 0.8. And then I'm going to sort by alphas. All right. So if you bring up the chart, then you can see how alpha has been changing over that time period. So if I guess this would be a way to kind of visually take a look down at the alpha area in the report and go back through history and see if alpha has been consistent or if it's been changing. But no, there's no template that looks for consistency with alpha. Yes, replays will be available. That will be sent out. Okay. Jeffrey, what is next week's webinar about? Well, this is, I've been working on something very interesting, and this isn't necessarily going to be next weekend. I'm actually hoping to get this done this weekend, and it's going to be the new template for what month are we? May? Yes, it's going to be the template for May. And if I do get this finished this weekend, I'm very close to having this completed. I would probably do a webinar on Monday, Memorial Day, at the same time, 9 a.m. But if not, then I will try and get that set for next Saturday. So this new template is very exciting, and it's a kind of a culmination of a lot of things, brings together a lot of things in the program. And I'll just give you a little teaser as to what it is. I can't show you anything right now, but here will be a good example. Everyone has heard of IBD, the IBD top 50. That's a list of the top 50 stocks from IBD. How do they come up with that list? Well, the consensus opinion is that list is derived from using some kind of relative strength calculation. And in my testing, I found that is actually, we can get very, very close to the IBD 50. This is just one example. I'm not saying IBD 50 is anything to pay attention to, but I'm just trying to explain what the template, this new template is doing. And I would recommend using many different types of relative strength function too. We'll get into this on Monday or next week. But for instance, this is just one example. Take the IBD top 50. Take the base low of the market. So let's bring up SPY here. Okay. All right, base low, I think we can all agree, was December 24th, 2018, base low. What was in that list of IBD 50 at that period of time, on that day? If you had bought that list of IBD 50 stocks and held it through to today, how would an index of that look? What would be the percentage change of an index of those components? Okay, that's one idea. Second idea, what if instead of just taking the IBD 50 at this point in time and comparing it to how making a comparison of how it performed to today, what if every day after here, every single day, you rotated into the newest IBD 50 stocks, and you now have an index going forward of the rotation into those IBD 50 stocks? How does that compare to a static list? How does it compare to the overall market? How does it compare to an index of your choosing? It could be an index just of SPY, it could be an index of the FANG stocks, so on and so forth. Secondly, IBD 50 is just taking a top slice of a whole ranking of stocks based on that relative strength. What if you took 10 slices? So you took the bottom of that list and then 10 slices all the way through to the top. How did the bottom list compare to the top list? The bottom group, how did that compare to the top group? Then what if you rotated into the bottom of that list every day? Okay, so this this template will actually you just specify the ranking function that you want, the relative strength function that you want, and you run it, and you'll see charts that show you all of the differences, and you might be surprised at the results. So that's all I'm going to say about it. And well, hopefully I'll get this finished by the weekend. It's actually been quite a slog to get this done. There's a lot of coding going on behind this, so I'm excited to show it, and I hope you can join me to find out all about that. Great. Okay, Ross, let's find out. But there's no problem with the data run. Ross, yeah, Ross, I'm obviously from your description of what you're seeing, I can't tell from here. So I would suggest that we connect. If you can install TeamViewer and shoot me an email with your connection information for TeamViewer, I'll take a look at your computer and see what's going on. Do a search on the web for TeamViewer. It's a simple install you can do. Yeah, Jeffrey. That's kind of the idea. Yeah, I mean, most stocks are correlated to the market. I haven't read that book. It sounds interesting. Jeffrey's saying that, or you can probably see, he's saying there's a book called The 90% Solution. It says most stocks are correlated to the market. Okay, John, yeah, that's right. FFTY is the ETF for IBD 50. I'm not sure with FFTY how if they're dealing with rotation, how frequently they're rotating into the different stocks. But yes, that is an ETF correlated to it. But I don't think you'll find the components of that ETF listed, obviously, because they probably change fairly frequently. And the other thing is I think that IBD don't give the components of that list to anybody unless you are a subscriber to their IBD paper. So if you're interested in the relative strength function, the IBD relative strength function, and you want to find, if you have IBD and you want to compare the stocks in your IBD 50 to the top 50 stocks based on that relative strength function, either wait until Monday, and it's going to be very easy to do, or just take a look at the one of the new templates was a Mark Minervini template. And in the Mark Minervini template, there's a relative strength component to to the scan, and that relative strength component uses the same relative strength that I was talking about, which mimics the IBD relative strength. Thanks, Jeffrey. Thanks, Brock. Okay, guys. Thank you all for rotating. See you Monday or next Saturday. I will send out an email about when that's going to be. Hey, John. Hey, good to see you here. Wojtek. Ralph, everybody. Profil. Great. Thanks all for coming, and I'll see you shortly. Bye for now.